So the next topic we'll talk about is support and resistance tests. So the more a level is tested by price action from the same direction, the weaker it becomes over time. When this happens, support repeatedly tested from above will grow weaker with each test, and as a result, buyers are absorbed each time sellers fulfill their orders. And we see the same with resistance, where resistance repeatedly tested from below will grow weaker with each test. Sellers are absorbed as buyers fulfill their orders. So remember, in a market, you are not directly exchanging or buying and selling from your cryptocurrency exchange or the platform. That platform is just acting as an intermediary. They're facilitating the trade between you and someone else who's either buying or selling, right? For every time you buy, someone else is selling. Every time you sell, someone else is buying. So when you buy or sell at these resistance levels, right, either a support level or a resistance level, someone at that point is either buying or selling at those particular points. So over time, if price keeps going up and keeps testing those significant levels, the amount of people that are buying at those levels, right? If price goes up, and typically people are going to sell at resistance, right? If price goes up and it repeatedly keeps going up, that means all those people that are buying, the selling that are selling, I should say, that they're selling at resistance, they need to have somebody buy at those levels. If it keeps going up, the amount of people buying is going to go down because they're already having their orders filled. If that becomes the case, if they want to sell, they have to sell at a higher price or fulfill higher orders, right? And if we take a look, and the same works in reverse with the support level, right? Price comes down before we move on to the next slide. Price comes down to our support level, and when we come down to support, people want to buy that, right? Now, each time that happens, there needs to be people selling for people to buy, right? You can't just buy from the exchange. You're actually buying from another person. So every single time price comes down to this bottom, the amount of people buying and the amount of orders that they can buy from the people who want to sell goes down because there's not enough people willing to sell at those prices. Maybe they want to sell at lower prices, or maybe the buyers have to adjust their prices, so now they're going to buy at a lower price, or so on. And this is actually represented in the exchange UI with buy walls and sell walls. In case you are unsure what buy walls are, be sure to check out our exchange UI lesson. And we actually see often these depth charts and these walls, particularly within the order book, will align with major levels of support and resistance. So it's not just lines on a chart or figures on a chart. It actually correlates pretty often with what's actually happening on the exchange order books. Next, we'll talk about SR flips, support and resistance flips. So once these levels are broken, let's say they're constantly retested and eventually they're broken by price, the support and resistance level will flip. This means that broken support will turn into resistance and broken resistance will turn into support. So let's have our imaginary level, and let's say price is coming down. It keeps retesting this imaginary level. Eventually price is going to break down. And now, since price is below that level, it's below that line, anything above it is going to act as resistance. So now when it comes back up, or if it comes back up, it's going to hit that same level and it will act as resistance instead of support. And the same thing with resistance turning into support. So let's say price, here's our imaginary line, price is below it, and it keeps hitting this resistance level, it eventually breaks past it, and then if it comes back down, since price is above it, it looks at that level as support. And if it comes back down, it would act as support because it's still a significant buying or selling level. Now, these support and resistance levels can be more confidently considered broken by a candle close through the level versus wicks. here we see candle body closes giving more weight to the move versus wicks. And we also want to consider higher time frame closes to make a stronger case. So when doing this, we want to really consider the higher time frames, such as the daily or the weekly, maybe the 12-hour, depending on what your goals are and what you're trying to do. This will give greater credence to the idea that the level was actually broken. I find wicks are fine for horizontal support and resistance, or it's interchangeable. You could use wicks or you could use candle bodies, but when it comes to identifying when that level was actually broken, wicks often are just anomalies, so to speak, where price will wick below it but not necessarily indicate that or stand as an indication that price is actually broken through that support or broken through that resistance. Realistically, to be more conservative and play the more safer approach, we want to wait for a candle close and to see where the next candle opens and to give greater credence to the direction of the move. I personally don't enter a trade in the middle of a candle of when in the middle of a candle open. I wait for it to close. I have my trade idea planned out. I wait for that specific candle to close to confirm my idea, and when it does, that's when I enter. Now, a level that is frequently tested will become a significant or a strong level if it does in fact flip. We see this where well-tested support becomes significant levels of resistance, and well-tested resistance becomes significant levels of support. So here's our example of support. Let's say price is coming down, it keeps hitting this level, and it fails to break past. Same thing with resistance. Price is coming up to this level, and it keeps getting rejected. It comes up, it bounces back down. It comes up, goes back down, comes up, goes back down. It's failing to breach past these levels. Now, in the event that these levels do fail, we see an SR flip. We see a flip or a reversal in where where resistance turns into support and support turns into resistance. So let's see, in this case, here's our resistance, this top example. Price is coming up, it's rejected. Price comes up again to the level, it's rejected. Price comes up again, finally breaks past the line, past the resistance level, and it's up here. At this point, if price comes back down, at some point, if it does retrace back to this level, it will act as support. And since it was so significant, we could say that this could be a significant level of support. And the reverse works as well, where support turns into resistance, considerable resistance at that. Let's say price comes down, it's rejected. Price comes down, it bounces off again, it comes down again, falls below the level of support, and let's say if it retraces back to this level of support of the previous resort of support, now it's going to act as resistance. And because it's so well tested, and it's not only just frequently tested in more recent times, but also how generally fresh this whole level swap was. Now that it's acting as resistance, it's more likely to hold as resistance and for price to continue to be rejected from here and fall to the downside. Now here's an example. This is Bitcoin and the US dollar on the daily chart. Here we see an important price level of the Bitcoin chart, the 40 to 42K range. This level has acted as a significant line of support and resistance throughout 2021 and also into 2022. Here we see particularly, so this is this 42 to 40K range. We have this outline in this yellow rectangle. And we see several instances of Bitcoin price action, either working to it and it being used as resistance. So we see it here is significant resistance. Price came up, really rejected. Price comes up again, rejected. We could argue this wick was some sort of test, but since it doesn't necessarily touch the box, we won't. That's a bit more subjective, if you will. I personally would, because I would say, well, it gives greater credence to this area, and the fact that it was in this downtrend and it made an either a lower high compared to what else was going on gives credence that, hey, this is a significant rejection area. Finally, price does break past. We see it act as support here. We see some instances of support here, but then ultimately failing. More instances of it acting as resistance here, resistance here, resistance here, here. This acted as resistance, particularly at 42K. Price comes up and was rejected from 42K, and it finally comes back up. Here we see a level of support, more levels of support in late September 2021, and so on.